What's going on, everybody? This is Marcus, and I would like to welcome you to another episode of the Quick Cast, powered by Black Married and Debt Free. We are live and in full effect. So I would like to say thank you for joining those listening after the live, those who are listening during the live. Shout out to you. Do us a huge favor if you haven't already. Please like and subscribe to the channel here, Black Married Debt Free. We're giving you videos every week. And so we want you to also hit that notification bell so you can know when we're going to be dropping all the videos. And you know what this is. You know when I come on live, you know what's going on. We're talking housing market. We're talking economy. We're talking all those great things. So we're going to get straight to it. You know what I mean? We're not going to waste time. We're gonna get straight into this here. Let me get your comments ready. So, home building fell sharply in July as costs increase. Now, if you're following me, you know maybe the term crash is a bit hyperbolic. Maybe that triggered, trigger warning. That may have triggered some folks. When I say housing crash, right, our mind automatically, and we've talked about this, our mind automatically goes back to 2008 and the bubble bust, the subprime lending and all this. And we're like, well, we're not doing that. That's not happening right now. We're not, no one's, lenders, there's no faulty mortgages out there now, blah, blah, blah. And while that person who may use that argument is correct, that doesn't mean we're not facing a reset, because we are. The numbers are telling us this. And this article from Wall Street Journal, I'm going to go ahead and put it up on the Jumbotron here. This article says house construction in the U.S. continued to slow in July as high inflation and higher mortgage rates make it more expensive to build and buy property. We're going to dig on this a little bit more, but if you listen to my quick cast from last week, I shared how folks were buying homes when rates were low, new builds, and you don't lock in your rate until the home is fully constructed. And that could take, 4, 6, 8 months. I don't know how long it takes to build a home. But during that time, the interest rates had changed. And when folks came to the closing table, once the home was built, their rates had increased. And if you follow us, you know that even a 2% change to your interest rate can add $200,000 to your payment and increase your monthly payment tremendously. So these people were saying, hey, can't do this. Things have changed. And so you could keep that little deposit I gave you because I'm up out of here. And we're seeing that happen. And so that's hamstringing the new build sector of the real estate market. Okay. So let's dig a little deeper on this article here. So it says building permits declined 1.3% to 1.7 million. The decline comes amid moves by the Federal Reserve to raise interest rates to combat inflation and cool the economy. The home construction and permits figures can be volatile month to month. So let's talk about, I like that word volatile. That's good. That was a great segue. Last week, I shared how the interest rates were hovering around 5%, right? And that was actually kind of what some folks called a breather for new home buyers, a second opportunity for new home buyers, because 5%, that's pretty solid. We were up in flirting with 7 at one point in April, and we had gotten down to 5. Well, I told you then that this is very volatile, and the interest rates are based on bond rates, the stock market, and a whole bunch of other things, and of course what the Fed is doing. And so I just wanted to temper expectations with that. And let's go to the current rates for today per Forbes.com. The current rates for today are 30-year fixed 5.5. Last week they were 5.56, so they're slightly down, but they're definitely going up. How do I know they're going up? Well, I'm glad you asked. the fact that we saw the interest rates or the inflation numbers actually decline emboldens the Federal Reserve, because they're feeling that, hey, what we did actually starting to work. We increased the interest rates, and we're seeing not only has inflation slowed, but it went down. Now, I shared last week that number is a bit skewed because it went down because of the Biden administration taking and dealing with the tax on the gas. So naturally, the numbers are going to show some type of decline. But the interest rate don't want to hear nothing about that. The Fed don't want to hear nothing about that. They're like, hey, it's because of what we're doing. You know what I'm saying? And so if something in your mind is working, you don't stop doing it. You double down on it. And that's exactly what the Fed intends to do. They're going to continue to raise the interest rates because it's beginning to show signs of working on the inflation piece. So if you know my stance on this, I believe there will be a perfect sweet spot, if you will, or there will be opportunity. My guess is sometime towards the end of the year, beginning of next year, first quarter next year, around there, right? And I'm gonna go ahead and stand on this. You know what I'm saying? I'm not an economist, but I do study this stuff, and I think there will be an opportunity for home buyers and investors. There will be an opportunity when inflation is down. At that point, I feel that the interest rates will be extremely high, be in the 8s, 9s, 10s. Home buying will cease. People will say, I can't afford this. This is ridiculous. But what that will do is drive prices down, because no one will be buying, obviously, at this point. And that will force prices to go down, which we're seeing with people forcing the hand of home builders, forcing new builds to cease, right? When we stop buying, we start determining the price. If I'm not buying it at this price, you're going to have to drop the price. And so I believe that will happen even more as the months go on. And once the Fed sees, hey, we got an interest rate lowered, we've created friction in the market to where now new home sale prices are down, new home build prices are down to a reasonable number, they'll begin to trickle down the interest rate back to entice folks to buy. Because it's a cat and mouse game. It's like a dance, right? There's times in the recent future where the Fed lowered the interest rate because they want people to buy. We saw that in 2009, in 2010, following the crash and stuff like 2010, following the crash. The Fed was tickering down the rate because now they want people to buy. So to me, that will be your sweet spot right there. I don't know how long that spot's going to last, but what you want to do is you want to prepare yourself now. You want to keep yourself abreast to the timeline so you know about when this will happen. It may be, I don't know, but I see it trending that way. And so you want to get as many, for lack of a better term, bullets ready in the gun so you can deploy them. But yeah, this is just a little update, guys, to keep you abreast to what's going on in the market. Per Wall Street Journal, home building fell sharply in July, and I think it's only going to get worse. So now I want to know what you all think. What are your thoughts about this? Do you even care? Does this even interest you? To me, I nerd out on these things because I'm looking forward to unloading on the housing market and when the time comes. And I know many of you are into real estate or would like to get into real estate or even get into your first home. So I want to hear your thoughts on this. I want to hear what you guys think about this. Let us know in the comments below what you think about where this market is going. Do you think we're headed for a crash? Do you think people are using triggering words like crash? Or do you, just let us know what you think. Appreciate y'all being on with me. I'm going to holler at y'all on the next one.